mean, so capex really was the story for Amazon. They're going to be spending about $200 billion for this year, and they're facing really what is now an uphill battle to prove that it's going to be paying off. It was about $50 billion ahead of what Wall Street was expecting. CEO Andy Jassy saying that's going to be predominantly spent on AI. He defended the plan on the analyst call and pointed to their track record of monetizing investment cycles in the past.
I think we've also proven with AWS over the years in how we build data centers and how we run them and how we invent in there. If you think about our chips and our hardware, our networking gear, and how we've invented in power, that this isn't some sort of quixotic top-line grab. We have confidence that these investments will yield strong returns on invested capital.
Guys, as Wedbush puts it this morning, Amazon is in prove-it mode, says there will remain an overhang. Investors are going to likely need to see more tangible returns before getting comfortable again. RBC puts it this way. They talk about AWS strength. It's largely positive. It was actually positive in the quarter, but says a sub-$1 billion beat was simply not enough to justify the capex numbers there. Competition now, another overhang. It's not just spending in light of what we've seen from cloud growth over at Microsoft and Google and their reports. D.A. Davidson worries about AWS continuing to lose its lead, say they're now scrambling to catch up through escalating investment. D.A. Davidson here also concerned about Amazon's retail transition. They talked a lot about this new chat-driven internet. That's going to be dominated by Gemini and ChatGPT, according to this firm. So that's adding some jitters here. Citi, though, finally, more optimistic, says AWS, clearly experiencing impressive AI demand trends with monetization. They also pointed to that 24% year-over-year growth. This is now a $142 billion run rate business if you look at just AWS alone, guys.